Jim Wyckoff says we need some fresh, bullish fundamentals for the gold market here. He's up next. Jim, good to have you back this Thursday.
Hi, Danielle. Always nice to see you.
Jim, let's start things off by speaking about this week, which is just full of some important economic data here. Let's start off with the GDP that came out on Wednesday, much lower than expected. We had Peter Hug on saying that he really expected it to move gold. It didn't. What do you make of it? And also we have probably the most important number coming out tomorrow on Friday, the Nonfarm Payrolls.
Yeah, I was surprised that very weak 0.1% growth rate was, certainly did not meet market expectations. The gold market did pop a few dollars an ounce, but that lasted not very long, and shortly thereafter, the report, the market fell back to unchanged levels. That was surprising. I think what you're seeing in the gold market here late this week, Daniela, is a lack of fresh bullish fundamental news to drive prices higher, to drive that safe haven demand. We've still got the Russia-Ukraine situation in the background, but there haven't been any major fresh developments here the past few days, and that's allowed the marketplace and traders, investors to maybe put that on the back burner and look at other issues.
Now that's on the fundamental side. What's gold looking like on the technical side here, Jim?
The near-term technical posture for gold remains bearish. We're in a downtrend on the daily chart, and that has allowed the technical sellers to come forth with that lack of fresh fundamental news, and that's in the bearish posture is allowing the sellers to have the upper hand at present. Combine that with the Dow and the S&P stock indexes hovering near record highs. That is a competing asset class that is pulling investor monies toward the stocks and away from other hard assets like gold.
Now we have job numbers set to be released tomorrow morning, Jim. Could that be a game changer for gold, at least in the short term?
Could be, Daniela. If we get a surprise number, surprisingly weak number, I suspect that might give gold a boost. A surprisingly strong number is probably going to put more downside price pressure on gold. I think the bigger catalyst, however, heading into a weekend could be if there's a fresh development in the Ukraine/Russia situation. I think that could really prompt some significant safe haven demand to give gold a solid boost here on a Friday.
So, Jim, is it correct to sum up and say, look, the weaker U.S. economic data that we saw should have been a bullish factor for gold?
Daniela, let me add to that notion. The one mitigating factor on the GDP report on Wednesday was that report was weak, but then immediately following that, there was a couple of stronger reports out in the national jobs report and the I think it was a housing report. They were a bit stronger than expected, so that did work to mitigate that GDP report. And then also some were thinking, and it's true that the GDP is old news. So those GDP reports are, it's already happened. They're already looking ahead.
Jim, thanks for clarifying that. And on the note about the economy, an interesting news item released showing that China is set to overtake the U.S. economy. This, according to the ICP, they're considered a leading world statistical agency. Jim, now even if this doesn't happen short term, medium term, what could it mean for the markets long term?
Daniela, as a macro markets watcher, I've been in this business for 30 years, and when I first got into the business, China was not much of a player at all. And that situation has evolved just in the past 3 or 4 years, where China is the dominant player worldwide, along with the U.S. China actually at present imports more raw commodities than the U.S. So China is becoming an ever more important figure in the world marketplace, including the precious metals. It's not a matter of if, it's a matter of when China's economy will overtake the U.S. I'm not sure it's done it yet, but I think it's going to happen in the next few years. We're just going to see the Chinese equation become ever more important in the world marketplace.
All right, Jim, with the time we have left, let's get to your Wyckoff market rating for silver and gold this week.
Daniela, I'm giving gold a Wyckoff market rating of 3.5. That's firmly in the bearish camp. We've got a near-term downtrend in place. So the path of least resistance, as long as the technicals remain bearish, is going to be sideways to lower. We've got overhead resistance in the gold market at this week's high of 1306.60. Solid technical support at last week's low of 1268 and change. Now, looking at the silver market, silver's got my most bearish rating right now, a rating of 1 for Wyckoff's market rating. We are hovering near a contract low. Just as we speak, Thursday, we hit a multi-month low in the silver market, solid downtrend in place. We've got solid support at the contract low in May silver of 1868, and we've got solid overhead resistance at 1950.
All right, we'll wrap things up now. Jim, thanks for being with us.
Can't wait till next time, Daniela. Bye-bye.
And thanks for watching this edition of Technically Speaking with Jim Wyckoff. We welcome your comments. Please email us at newsfeedback@kitco.com. Thanks for watching.